What's up, everybody? Joe Brown here. This is the Heresy Financial Show, and this is the episode where I answer your questions. I recently did a post on YouTube, and I just asked you guys, hey, what are the questions that you have that I just haven't answered before, or maybe I've answered them, but you haven't seen me answer them. You haven't seen the videos in which I answer them. So I looked at all those questions. We've got 14 questions here that I'm going to answer for you here today. Let's dive in. All right, first question we've got from Robert. You explain where we are headed and how to prepare or invest for that. What can be expected after the crash, and how would we be positioned then? So this question is pretty difficult to answer because it depends on how things unfold. For instance, if we continue on this current path with the Federal Reserve saying, hey, we want to make sure that the dollar doesn't collapse from hyperinflation, so they keep on tightening, they raise rates, we have a repeat of the 70s, it'll be different because they'll have to start up QE again just to buy treasuries so the government doesn't default. But apart from that, they can let pretty much everybody else collapse. They can let corporations go under. They can let individuals go bankrupt. They can let the whole deflationary deleveraging happen and maintain the value of the dollar that way. And so if they do that, then at the bottom there, we've kind of reset to a very different financial or monetary system than we've been living in for the past few decades. We've kind of reset at that point, and it really looked like the beginning of the 80s in terms of where you'd expect things to go from there. And so it really depends on how things unfold. And obviously the opposite would be true as well. If you have them decide, hey, we're not going to let a deflationary deleveraging happen, and instead we experience really high rates of inflation for a really long period of time, and we get an inflationary deleveraging, it's going to be completely different. And so unfortunately the answer is stay tuned, because as we see how they deal with the unfolding crash, recession, depression, crisis, that will determine how things are or should be played going forward. Next question from Oscar. I have a question about your approach to diversification. Recommended portfolio allocation between asset classes like real estate, stocks, silver, gold miners, commodities, Bitcoin, and long-term investment. Okay, so this is a really condensed version of my answer, which I'll either do a series or make a guide, something about this at some point in the future. But essentially, I put about somewhere right about 30% should be something like reserves. So reserves, typically people are going to look at that like cash or bonds. I don't like bonds. And so that would be, a portion of that's going to be cash because you have to have fiat cash in order to pay your bills, your expenses. So that'd be a portion of it. But it's all savings. This 30% portion is savings. So you've got your cash, got your gold. I lump gold in there. I put silver in there, and I do put Bitcoin in there as well. And so the mix of that up to you, but you got about 30% for reserves. That way you have dry powder and purchasing power to buy other things when they're on sale. The next portion would be 30% in business. So for many people, this is going to just be your stocks. This is going to be your ETFs. This is going to be your mutual funds, your 401k, your brokerage account. For a lot of people, it's going to be investing in the business you're starting. So this is business. This is where you get that long-term capital appreciation. Sometimes you get the cash flow from that. And so do not feel bad about missing out on ever investing in the stock market if you're the type of person who has created a lot of wealth throughout your life because you've started businesses. You know how to start them. You know how to grow them. You've developed a portfolio of companies. You've started multiple businesses and sold them. Don't feel like, oh, I have to get into the stock market, because the game you're playing is arguably much better. And I've seen this time after time. People come to me and they say, hey, I've learned how to make all this money. I've started these businesses. I've sold businesses, getting a bunch of cash, and I've developed this nest egg, and I've never touched the stock market, and I feel like I should. Well, how do I invest in the stock market? And I'm like, you don't need to. Those are businesses. Those are bigger businesses that other people have started. You're doing much better with the businesses. They're still businesses that you've started. And so don't feel like you're missing out on something when you're focused on your niche there. And then another 30% would be real estate. This can be done a number of ways through, again, ETFs. It can be done through syndicated. You could be doing it through REITs. You can be doing it through individual rental properties that you own. You could be doing it by owning multifamily property. number of ways, but having some exposure to land, to real estate that cash flows, typically an inflation hedge, especially if you have it leveraged, that should be a big part of your portfolio as well. Now, 30-30-30, that leaves 10% to speculation. So there's going to be things you'll want to play some options plays on some companies you think might explode or on things you think might crash. You're going to want to potentially play with some other cryptocurrencies. You're going to want to speculate, and I usually reserve about 10% of my portfolio for speculation of some sort, just to be able to buy some lottery tickets, basically. And if something hits, then it's like it really helps out your overall portfolio. But if nothing hits, then it doesn't do much damage. So that's my really condensed view on portfolio allocation. And really, if you have 10 or 12 positions, as long as they're uncorrelated, that's enough diversification. If you've got 1,000 positions, but they're all stocks that are in the major indices, well, then you've got no diversification. They move up and down together. So that's my thoughts on that question. CJ, would you start a channel for newbies explaining basics? There's hundreds of channels out there to do this, but I like the way that you explain things, like an investing 101 for somebody who has no investing experience. I'm going to turn this question back around on you guys. I'm definitely open to this. I've actually thought about it before. I thought about just making individual videos, kind of more of a series on this channel. Let me know if you would be interested, or maybe you wouldn't be interested in this, but let me know if you know a lot of other people that would be interested in a more basic video series that explains investing and economics for the absolute beginner. Let me know if you think that would be valuable. Miggy, when do you think Bitcoin will stop trading like a risk on asset? And what do you think of Ethereum? I hate Ethereum. It's garbage. So I'll answer the question about Bitcoin. I think Bitcoin will stop trading as a risk asset once it is a small percentage of most institutional portfolios. When it's in most 401ks by default, when it's in most pension plans, when it's a part of corporate treasuries, and when it's a part of central bank balance sheets. I don't need it to be 100%. I don't need it to be 5%. I don't even need it to be 1%. But even a 0.5% allocation to Bitcoin on average across those that's the big money across the world. That's when it will stop trading like a risk on asset, because once it passes the thresholds of getting the regulatory approval in the different jurisdictions it needs to around the world, it will start to get adopted. And just the sheer amount of money out there that would flow into it, even from like a 0.5% allocation, would decrease the volatility so much, because it would increase that market cap. You'd have such a huge flow of wealth going into it. It's when it's smaller that volatility is higher, that it trades like a risk on asset instead of what it really is designed for, which I believe it will become more of in the future, which is basically savings, kind of like a treasury allocation or a cash allocation in a portfolio. Good question, JA. What are basis points and what do they mean in regards to inflation? Okay, so a basis point is 1% of 1%. So if I borrow $100 from you at a 1% interest rate, I'm going to owe you $101 back. A basis point is 1% of 1%. So if my interest rate borrowing $100 from you is 1 basis point, then I'm going to owe you 1 cent. I'm going to owe you $100 back plus 1 cent of interest. So that's all they mean. So when it says the Federal Reserve is worried about inflation, so they raised interest rates by 75 basis points, that just means they didn't raise interest rates by a full percent. They got to 0.75%, 0.75%, 75 basis points. It's also many times referred to as BIPs, because basis points is BPS. So people will just say BIPs when they're talking about basis points. It's the same thing. It's just the percent of 1%. So basis points, BIPs, 1% of 1%. Question from Paul. How can you tell when there's blood in the streets, even if it's your own? Because that's when people like Warren Buffett say that's when you need to buy. This, a lot of times, unfortunately comes down to emotional intelligence, something about, really knowing yourself, because part of that is just experience and practice. And so early on when I first started trading, I was looking around, I was making a lot more money than my job just from trading options. I was making a lot more money than everybody I knew, everybody around me. I taught other brokers on how to trade options, trading options for clients. I was looking at everything I was doing and thinking, I'm a genius. I'm the smartest guy in the room, which anytime you think that, you know you're not. And so after going through that and then losing, it was about 80 to 90% of my net worth on one trade following that, and just completely, you talk about getting humbled. A lot of people say, oh, that's very humbling, when they mean, oh, that makes me feel really good. No, when you lose 80 or 90% of your wealth on one trade, your net worth on one trade, you were telling everybody you were smarter than them and you were making a ton of money. And then you wind up and realize, no, it was just actually, you know, beginner's luck or dumb luck, or you were not actually as good of a trader or as smart as you thought you were. That's a very humbling experience. And you go through that, or maybe a couple of times, and you start to realize markers in your own head when something is too good to be true. So this is the opposite of the blood in the streets, but something starts happening that's too good to be true. Eventually you start to recognize that and you think, oh, this is a bubble. There's euphoria, and I know there's euphoria because I feel the euphoria. And it's really hard to recognize euphoria when it's yourself. It's easy to look out in the world and say, oh, this is a bubble, that's just euphoria. But ultimately, you never really know. It's a lot easier once you've lived through it a couple of times and then lost money on the other side to say, oh, that was the sell signal. I thought I was brilliant. I thought it's super easy to make money. I was euphoric there. And so that's the signal kind of to sell on the upside. Then the opposite is true as well. The blood in the streets, again, emotional intelligence. When you have this fear of losing everything, you stop wanting to open up your brokerage account, your 401k, because you don't like seeing the new red every single day. You're at that point of desperation where you're just about to sell everything because you think there's absolutely no way it can do anything but go down from here. You start to feel that desperation. Everything looks terrible. Those are the points kind of on the other side where you have to recognize those thoughts in yourself and realize, okay, that's the emotions taking over. And when that starts to happen, that's a signal that everybody's average in some sense. Everybody is, you might be above average or below average in certain areas. Everybody altogether makes the average. And so everybody in certain areas is average. And so when you're looking at an investment, when you're looking at a trade and you're feeling that way, chances are a huge majority of the market participants are feeling the exact same way, which means you're at that point or close to it of capitulation. You want to train yourself. First, you have to practice it and live through it and lose a lot of money. And you have to train yourself to recognize what those emotions are as you're living through them and trading through them and investing through them, and see what happens on the other side. And a lot of this comes down to recording it. You can journal, you can do all of that, and then go back and look at it with a, hindsight 2020. And then in the moment when they come up again and they happen, that's when you can start to recognize. And so it's not just buying the dip. It's not just saying, hey, these things have gone down. A lot of it comes down to emotional intelligence, because you're going to be investing in the things that you're invested in and that you know about. That's, I think, the biggest key. That unfortunately, those are expensive lessons that come early on, and you have to get to know yourself, and you have to have self-awareness and start to judge and accurately assess what is going on inside your own heart and mind. Jin Key, where'd you get those cool shelves in your background? Hobby Lobby. Don't know if they have many more. Bought them a couple years ago. Bought them at Hobby Lobby. Okay, so this question is actually the most common question I've ever been asked. Almost every single video, somebody asked me this question. The brand of t-shirts that I wear in my videos, where do I get my t-shirts? I've got a t-shirt guy, and that's all I'll say about that. Next question. No, just kidding. I actually do. The brand is Next Level. As far as I know, Next Level only sells to retailers. They don't sell retail, they're only wholesale. You can't go direct to Next Level. So that's why if you ever get t-shirts from anybody doing like a big t-shirt campaign, apparel, like things like that, brands will put their brands on shirts. A lot of times you look at the tag and it's made by Next Level. They're a very big t-shirt company. And so I have access to a retailer that is selling them to me at cost without printing anything on them. But I know you can get Next Level t-shirts on places like Amazon. They just have a small markup. They're, again, unbranded. They don't have anything printed on them. I don't know the exact t-shirt code. The reason why I have these shirts is because something, a little bit about me, I tend to spend a lot of money searching for something that I like. Depending on the item, I'll spend hundreds, sometimes even thousands of dollars trying a ton of different things out. And when I find the one thing that works best or that I was looking for, the one thing I like the most, I'll go all in on that. And so if you look at my closet right now, it's literally just like a couple dozen of these t-shirts. These are the only shirts that I have. I went through a ton of different shirts and finally found, oh, these fit the best. I like the color the best. I like the quality of the material the best. And so I've just bought a ton of them, pretty much every color that exists. Next question, Starbright. Where is the safest offshore place to store precious metals? My favorite places are Singapore and Switzerland, although I never recommend storing them all in one place. I like to have some near home. Obviously, if you're a public personality, if there's any chance that somebody might be able to find your address, that's not a good idea to have any in your home. Close to home is good so that you have just in case you need to use some for barter. If you live in a country where they have any history of confiscation of gold, you want to keep as little in that country as possible. If you want to store it in another country, again, don't store it in another country where they have any history of confiscation of gold. I don't have anything in the UK, very, very, very little in the United States. And so I like to store it in Singapore, in Switzerland. I used to say Canada, but recently they don't have any history of gold confiscation. We'll have to monitor the unfolding of tyranny there to see how things go. You can use services like One Gold and Vaulted and plenty of others. Shift Gold has a partnership through TDS where they'll store in various countries for you. And so I just like to make sure that it's a country with a high degree of economic freedom and no history of confiscating gold. Question from Black Camel. I would love to hear why you don't consider Bitcoin fiat currency. Very simple. Fiat means by declaration or by decree. It doesn't mean worthless or no intrinsic value or fugazi or meaningless or worthless. It means by declaration or by decree. It means it's a currency or a money that the government says you must use. That's it. That's what a fiat currency is. And so sometimes historically governments have said you have to use our currency and it's backed up by gold. So people are like, sure, we love that. Why not? So that's all fiat means, is by declaration. By that definition, Bitcoin is not a fiat currency. It is a currency. It is a form of money that has emerged in the free market and people have chosen it by free choice, not by coercion. Therefore, it is not a fiat currency. All right, next question. What are the reasons the Fed would choose hyperinflation over a deflationary spiral or vice versa? I don't think they would ever choose either one on purpose. Their whole existence relies on really neither of those things happening. And so they're going to always try and strike that balance between the two. Typically, historically, when they make an error, they do make an error tipping to the side of hyperinflation. It's not just the Fed, it's central banks throughout history. Sometimes they do tip over. They're trying to get more inflation and they don't do that enough, so you get the deflation instead, like the Great Depression. In my opinion, that is a good thing. That's what the proper response is, to just let all the deflation happen. Either way, they're not trying to go for either one. They're trying to thread that needle. It's just so hard that it's basically impossible. And typically they accidentally choose too much inflation. All right, what are some things that I haven't talked about? Well, one of them is my story. I rarely talk about my story, just it's a little bit vulnerable really for me. And so this might be something you guys can let me know if you want to hear more detail in my story. Very briefly, went to school for Christian ministries. So a lot of people went to school for economics, business, things like that. I went to school to become a pastor. And shortly after graduating, making less than minimum wage, having a ton of debt, I realized, hey, I need to do something about this. And I started studying personal finance, just Dave Ramsey, debt snowball type stuff. And I absolutely fell in love with it. And I just knew like, hey, this is what I'm really interested in. And this is how I want to help people, because ultimately I knew I wanted to do something in service to others, to help other people out in life. And that's why I was going to school for Christian ministry. When I found kind of investing, personal money management, things like that, I was like, this is the way I can do this best. And so we did the debt snowball. We got out of debt in like 9 months, 30 grand. And I got a job as a stockbroker just because I wanted to, go as deep as I could into it and learn everything that I could. And after spending almost 5 years as a stockbroker, I realized everything that the industry is pushing on people is pretty much wrong, to the point of maybe dangerous. Couldn't keep on doing it anymore. And that's when I quit and started bringing the truth, bringing the word, preaching to the masses here, and started my YouTube channel. I also tried a bunch of other things. I did consulting, started a blog, I self-published a few books. I did a number of other things, and the YouTube channel is the one that kind of took off before the other ones did. So that's when I went all in on making YouTube videos there. So that's my story, and that's really the main thing that I don't talk about. And please let me know if you'd like me to start talking more about that, go more into detail on my story there. Last question, do you have pepper on your eggs? Depends. If I have a hard-boiled egg, I'll do salt and pepper. If I have fried eggs or scrambled eggs, I'll usually just use grass-fed butter because that is flavorful and salty enough for me. As always, really appreciate you guys. Thank you so much for all these questions. It was a lot of fun answering them, and hope you had as much fun as I did listening to the answers. Thanks for watching. Have a great day.